I'd like to thank everybody for joining me today. Today, I want to talk about income tax planning. As we're getting into year end, of course, this is the time of year that everybody's focused on how do I save taxes before 12/31. Just understand some of this income tax planning can happen, has to happen before December 31st, and some things can happen after year end depending on what we're looking at. But I think for most of our clients, they think 12/31 is the deadline. So let's take advantage while we can. As you start looking at income tax planning, it really comes down to we've got to focus on what type of tax are we trying to save? Is it income tax? Is it capital gains tax? Of course, we know there's other taxes, but today I'll focus more on just these two. But as you start getting into the planning, into that tax planning mentality, we want to look at what's the pain points for our clients and be able to start solving those. Just understand as you're doing tax planning, remember it's one, are we eliminating the tax? Are we deferring the tax? What is it that we're trying to accomplish, and what is it that our clients need? And I always look at when the clients I'm working with, like I worked with a CPA a couple of years ago, and we were coming down, are we going to do a qualified plan? And she was very aware of, if I do a qualified plan, yes, I'm deferring the tax and we'll have to pay tax, eventually, whatever marginal rate she is taking it out when she retires. And we had a great discussion about deferring tax. And finally, I asked her the question. I said, can you sleep at night if you pay the tax now and avoid the tax in the future? What is it personally that is going to make you happy? She finally came back and said, I need to take a tax deduction now if I can get it, knowing that I may pay more tax in the future because of the deferral. There again, it's up to our clients. Our job is to just present these solutions or opportunities for solutions. As we start looking at tax reduction, I'm looking at, 4 different areas today. The first one, and I think this is where a lot of our clients jump to, is qualified planning. And I have no problem with qualified plans. Just understand qualified plans is a deferral, not an elimination of the tax. Now, for individual clients, they're basically going to be stuck with whatever their employer offers, or they're going to be stuck with either a Roth or a traditional IRA. If we have a business owner client, then we can start talking about more. Do they want to do a profit sharing plan on top of their 401k? Do they want a defined benefit plan? Or do they want to have more insurance and annuity focus with a 412(e)(3) plan? All of these are good plans. It really just comes down to how big of a deduction we need, and if we're working with a business owner client, how many employees do they have? If they have a lot of employees, that defined benefit plan may not work. Now, I just met with a doctor a few weeks ago, and they have no other employees. And with a client like that, we can go into a 412(e)(3, we can go into a defined benefit plan. If they want more flexibility, maybe it's a 401k with the profit sharing plan. All of these are good ideas to bring up with the client. We just need to see how that works. The other thing that you can look at is if you want to add life insurance into a 401k profit sharing or defined benefit plan, that can be a good place to put life insurance. Just understand, if a client dies with life insurance in their qualified plan, the death benefit in excess of the cash value pays out income tax free. So all of these things are good opportunities for a client to, there again, reduce the current tax. Charitable planning is a great tax planning strategy. This can be a win-win strategy for our clients, a big win for them on reducing taxes. It can be a big win for their kids as we do replacement life insurance for the amount that we put into charity. And it can be a big win for the charities because they're going to get more. The tax code is designed for charitable planning. Now, Where I use a lot of charitable planning is when I'm working with high income professionals that are W-2 employees. If they're a W-2 employee, and think about a highly compensated doctor, if they work for the hospital, their only deductions are what they put into their qualified plan. And now we've got to go over to itemized deductions on their personal return, which leads us right into charitable deductions. This is a great way to plan. The other thing that you've got to look at is are we getting to a point where we want to get rid of assets? So when you think about it and getting rid of assets, you're going to sell a large stock portfolio with low basis. You're selling a piece of real estate with a low basis. You're wanting to get out of your business. It's time to retire. You want to sell it. All of those things may lead us into charitable planning, especially right now, charitable remainder trust. With charitable remainder trust, you can sell that asset tax-free inside the trust and now pay out lifetime income for your client and a spouse, however we want to set that up. And it's worth looking at to see, can this generate more income in retirement for a client than if they were to sell the asset and just reinvest the net proceeds. So charitable planning can be a huge opportunity for the right clients. Life insurance, I include this in the income tax reduction strategies just because of the Roth IRA lookalike. We talk about life insurance as a retirement vehicle, can be a great thing, especially when we're looking at a balance between taking money from qualified plans, RMDs, and in those years where maybe the market's down, instead of taking it from our IRAs, maybe we take more distribution from the life insurance policy because we can take it tax-free and let the balance in our qualified plan grow, come back up, and then start taking more from there. The other thing I like about the life insurance and the income tax reduction strategies is it just gives us an opportunity to create balance. And we're not getting a deduction putting it in, but it can be a great opportunity for us when we're accessing the money. The other thing I like is we've got a lot of estate tax benefits here. We've got a lot of creditor protection with life insurance in the majority of states. There again, it just gives us an opportunity to help plan. Finally, we come around to the business strategies. When we're talking with clients on income tax reduction and we have a business owner, the playbook opens up. Open up that toolbox because now we get to start doing a lot more. It's when you start looking at business strategies, using micro captives. Micro captives give us the opportunity to potentially deduct up to $2.65 million from the operating company's income. It's, think about that. Go to your client and say, do you want a $2.65 million income tax deduction this year? Now, depends on how much risk they have in their business, but it's a great tool, both from a risk protection for the business and income tax reduction for the client. Cost segregation, if any client has rental properties, they own real estate, buildings, apartments, multi-unit. All of those, cost segregation allows a client potentially to accelerate their depreciation and take bigger deductions now than they would if they didn't have a cost segregation study. Great way to do that. Clients that want to get out of, on the sale of their business, want to get out of the tax, ESOPs. ESOPs are great for the sale of a business. If we have a perfect fit, nothing beats an ESOP because the client going into the future can operate in a tax-free environment. Think about competing with your competitors. They're competing in a taxable world. You're competing in a tax-free world. ESOPs are just great. Other things that we can look at to reduce taxes, R&D credits are great for a client that's actually doing research and development. And the other ones that you don't think about this, having a C Corp, having an S Corp, are we able to reduce taxes by using the right entity structure? All of these income tax reduction strategies are just, we're just, hitting the tip of the iceberg here, but it's the time of year our clients want to talk about reducing taxes. And this is a great time to be able to bring out other strategies that they may not have heard before. So again, I appreciate everybody getting on. If you have questions, feel free to reach out and we can talk in more detail. Thanks again. We'll talk again next week.